Hello, my name is Isia Zun Nurani. NPM 23,411,066. Class Management 23. I will explain the material about definition, types, and elements of tax. Definition of tax. In general, tax can be defined as a mandatory contribution from citizens to the state as regulated by law, collected by the government, compulsory in nature, without direct compensation, and used to finance state expenditures for the common good. According to Article 1 of Law No. 6 of 1983 on General Provisions and Procedures for Taxation, CUP, as last amended by Law No. 7 of 2021 on Harmonization of Tax Regulations, HPP. Tax is a mandatory contribution to the state owed by individuals or entities that is compulsory based on law, without receiving direct compensation, and used for state purposes for the greatest prosperity of the people. Characteristics of tax. Compulsory. Tax must be paid in accordance with regulations, and the government has the authority to enforce its payment. No direct consideration. There is no specific compensation for taxpayers. The benefits are felt generally through public facilities. Based on law, all provisions regarding the imposition, collection, and penalties of taxes are regulated in legislation. For the public interest, tax funds are used to finance infrastructure development, education, health, defense, and other public services. Types of taxes. Taxes in Indonesia can be classified based on category, nature, and collecting agency. A. Based on category. Direct taxes. Paid periodically and the tax burden is borne by the taxpayer. Example: income tax, PPH. Characteristics. Cannot be transferred to another party. Indirect taxes. Levied on specific events or transactions, and the tax burden can be transferred to another party. Example: value-added tax, VAT. Characteristics. Generally imposed when consuming goods, services. B. Based on nature. Subjective taxes. Tax imposition takes into account the personal circumstances or conditions of the taxpayer. Example: PPH, as it considers marital status, dependents, and income. Objective tax. Tax imposition only considers the object being taxed, without considering the circumstances of the subject. Example: VAT and import duty. C. Based on the collecting agency. Central tax. Collected by the central government and used to finance national needs. Collectors. Directorate General of Taxes, DJP, Directorate General of Customs and Excise. Example: income tax, VAT, stamp duty. Local tax. Collected by local governments to finance local needs. Collector. Local Revenue Agency, Bapenda. Example: motor vehicle tax, hotel tax, entertainment tax. Elements of tax. For a levy to be categorized as a tax, it must contain the following elements. Tax subject. The party that is obliged to pay tax. This can be an individual or a legal entity. Example: an employee with an income above the PTKP is a tax subject. Tax object. Everything that is subject to tax. Example: income, ownership of land, buildings, transactions of goods, services. Taxpayer. A tax subject that has met the subjective and objective requirements in accordance with the law and therefore has an obligation to pay taxes. Example: a company that earns income from business activities in Indonesia. Tax base, DPP. The value used as a reference for calculating the amount of tax payable. Examples: taxable income, selling price of goods, import value. Tax rate. A percentage or specific amount used to calculate the amount of tax. Tax rates can be proportional, progressive, or fixed. Example: personal income tax with a progressive rate of 5% to 35%. Tax period. The time period used as the basis for calculating taxes, usually monthly or annually. Enforcement provisions. The government has the right to enforce tax payments through administrative or criminal sanctions if taxpayers do not comply. The role of taxes in development. Taxes play a strategic role as a source of state revenue, budgeter, to finance routine expenditures and development. A regulatory tool, regularant, to regulate the economy through tax rates, incentives, and disincentives. A tool for income redistribution, to reduce social inequality through the financing of subsidy programs. Economic stability tool, controlling inflation and maintaining people's purchasing power. Examples of application in everyday life. Income tax, PPH, monthly salary deductions for employees. VAT, tax listed on supermarket receipts. Motor vehicle tax, annual payment at Samsat. Import duty, tax on imported goods from abroad.